Good morning, good afternoon, and good evening to those of you around the world. Welcome to Trading Rebellion with your favorite analyst from Trade the Chain. My name is Nick Mancini, joined by CJ and Monte. We are here to break down everything going on in crypto, TradeFi, macro, and everything in between. Today is Tuesday. We are starting a day late due to some technical difficulties, but you can expect the show moving forward on Mondays and Thursdays, just a slight hiccup. So let's kick things off with just a broad picture of the markets. We do have to remember today is the last week of both the month and Q3. So I would not expect anything too crazy to happen, but we have new highs in the dollar, which has been a common theme on our show. We have new lows on the S&P 500 futures as well as NASDAQ. And crypto is mostly kind of flat from where we ended up over the weekend. I think we're kind of same price as when we closed last Friday. So let's kind of start things off on the dollar as we typically have been. We've been kind of using this as a weather vane. I think it's been much more useful on the equities side of life than crypto. But obviously, this breaking above the March high, as well as seemingly confirming above the March high, which I think is the more important kind of term here, does paint a picture where I think we might have to start, rolling up the targets that we may end up reaching as we head into October. Now, this could certainly deviate, but I don't know what would force a dollar sell-off other than possibly a massive PCE beat. We do have to remember we have PCE on Friday and we have GDP revision Thursday. So both of these could certainly impact the markets positively or negatively, depending on how they fall. But CJ, Monte, what are you guys thinking? We've definitely been paying close attention to this, and this is, more or less what we expected. But do we think this is going to continue higher? And if so, what are we looking out for in terms of headlines or macro data points that may, either support or take away from that?
I guess I can go ahead by just sharing my view on the dollar since we talked about it a good amount this morning. Look, up until proven otherwise is generally a rule I'll go with. In terms of positioning, there isn't a whole lot of edge left in the USD. Like, it's pretty neutral. We saw a massive shift in positioning where hedge funds, or specifically large speculators, actually bought quite a bit last week into this uptrend. So you might see that momentum continue, but there's really no edge in positioning here for me. Everything's pretty neutral, and perhaps if rates are going to remain higher for longer, and that the market is kind of figuring that out ever since last week's FOMC, then that does imply the dollar to be higher and to continue to go. So, we'll see how things are, but, I haven't traded a whole lot of FX just because there's not that much edge in it on the particular stuff that I look at to make trading decisions. But Monty, what do you think?
Yeah, for me, it's pretty simple. We use the dollar as a weather vane for equities, but it also works the opposite way as well. If you are expecting the equity markets to go down, more than likely you can expect things like TLT to start to perform well, and also things like the dollar to start to perform well. And really, like, from a technical perspective, if you look at the dollar, we really don't have any resistance at all until about 107. And then above that, we have a little bit more resistance at 108. And then there is where we had that massive drop off, which is a range where we could see some, plausible continuation. So up to 110, I don't think is out of the realm of possibility, especially when you consider the fact that this is what the equity markets are looking like right now. So I'm kind of applying it in the inverse way that we typically do, where instead of looking at the DXY as a vein for risk, just look at the NASDAQ. Like, who's going to buy this right now? I don't know. It seems like the dollar is where people are going to be putting their money. And I'm basing that mostly on the fact that equity markets are showing extreme signs of weakness. So those two things, a lack of technical resistance and also a lack of other vehicles of exposure that would outperform the dollar, I think all of that paints, like you said, CJ, up until proven otherwise. And for the dollar, I think that's the case. So I see it continuing.
Yeah, I agree with you. I will say, just to add, just so we're not, all on the same page here, because sometimes it feels like, Sunday Night Football, if everybody's picking one team, you start to think the other direction. But we have seen some oversold points on the 12-hour chart. They typically, end up signaling.
You mean overbought?
Or overbought. Yes, thank you, CJ. I always suggest overbought is the correct term. So overbought. Occasionally when it starts to creep up into that territory, it does signal that you're on the tail end of a rally, but doesn't have to mean it's over. And of course, just because past results happen doesn't mean they will predict the future. So just something to watch out, because we are getting overbought. So I would not expect, a missile, a Tesla, or not a Tesla, SpaceX launch, straight up to 107. But, maybe we consolidate around here a little bit and then start to move higher, or we just launch up. So just something to consider, that I wouldn't be uber bullish on this in the immediate state, but it does look very likely to keep creeping up higher towards 107. So let's pull it over to equities, because, as we've seen time and time again, a lot of people do get excited about crypto holding relative strength to equities. And eventually, time and time again, crypto just ends up following equities on some sort of lag. So this does not look very positive to me at all. I would be shocked if we don't end up at 42.50 by tomorrow, potentially end of day today. And then when you really start to look at the broad brush, actually, let me zoom out here. 4,200 is, where you start to, it makes a lot of sense for us to end up, which is, right around those February highs, and also acted as resistance before we moved up to the July highs. So Monte, CJ, you guys on camp 4,200? I've been seeing that a lot on both, the CNBCs and Fox Businesses, as well as the Twitter, which always makes me a little bit skeptical if I'm thinking the same thing that everybody else is. But it's also tough to think that we somehow survive this, especially with the quote unquote higher for longer. Jamie Dimon talking about 7% interest rates. I think Kashkari was saying, another hike likely necessary, echoing what Powell had said last week. So does seem like the hawks are kind of out right now. And do we think that shifts? Could PCE, could GDP revision change that? Or do we hit 4,200 before we even get those prints? That's really the tough kind of battle in my mind right now. I do think we head lower, just to kind of throw out my opinion, but we do have obviously those data points in front of us this week, which could, mean that we don't laser straight down. So what are your guys' thoughts?
That's good. I'm glad the Hawks are all coming out now that we're 10% off the highs. Yeah, same thing as the DXY, just, inverse down until proven otherwise. I try to ignore all that other stuff in terms of like news, and just, it's a lot of like noise right now, because you have kind of like both sides of the pin really kind of dramatic. But anyways, I try to just focus on positioning, and the fact of the matter is that there's a ton of people who rush to get long into the highs here on NASDAQ, ES, things like Nikkei as well, while they were simultaneously short dollar in many cases. So you're seeing the forced like liquidation of those positions, and there's nobody like who's been willing to step in and buy that dip yet. So what I want to see, before the bear market, or at least some type of like bullish reversal to occur, is for people to get mega bearish once again, and that to be reflected within short positioning. And we're just not really there yet. I think we still have some longs that need to capitulate, and are kind of in the process of doing so. And so, down until proven otherwise, just like let it do what it's going to do.
Yeah. And just, go ahead, Monty.
I was just going to say, for the most part, I agree. But, one thing I would watch out for is the fact that, so many people have been waiting for this bear market for so long. I feel like when you see a day like today, where we're down almost 1.5%, that's going to be like validation for so many people to jump on the short train and be like, okay, we're headed down. this is finally validated. My thesis is finally gonna be right, and I can finally make back some money that I've missed out on all year, which is a very dangerous way to be trading, but it is the reality of human psychology. So I worry that we might see a bunch of shorts try and pile in late, and then that in conjunction with the bears that were right, at the top taking profit, we actually see kind of a slowing down of this negative price action, maybe a little bit of positive price action to shake out some of the late shorts, and then we finally, go lower. I would not be surprised at all to see that. I think that, some people are going to be a little bit late to the party and try and rush in and force shorts, and that never works out and often leads to, at least some bearish and neutral consolidation. And if you're trading options, that's more than enough to kill you, because the time decay will basically eat you alive. So I'm not like rushing into any shorts right now, but in a few days, if we break down below the lows and we see positioning change, like CJ mentioned, like watching that COT data closely this Friday, I think will be very important. But barring any major changes in positioning, I'm still kind of just waiting. That being said, I do largely agree with you guys that the path of least resistance is just down until proven otherwise. So, but just be wary, because, we are at, if you look at the S&P just real quick, this is a critical level where we've seen resistance in the past. You know, now it's a critical level. I mean, we're a little bit below it already, but still, I wouldn't be surprised to see some profit taking and perhaps this come back up a little bit. Same thing with the NASDAQ, right at that critical level. People try and short this breakdown and we get a little bit of a bounce. So that's just something to watch out for. It would not surprise me. Like, don't just go be like, all right, this is it. The dollar's ripping and the NASDAQ's breaking down. It's finally time to buy some puts and just go put all your money on puts. That's a very dangerous game to play when we're down almost 1.5% today.
Completely agree there, and just kind of give some additional context, kind of what Monty's saying. Like, there's no point in catching a falling knife. So if you're just buying on a downtrend, that's there's no signal here, but there are some signals possibly forming, which could support kind of Monty's temporary rally before possibly heading lower. We do have possible bullish divergence setting up, so nice 4-hour downtrend, RSI uptrend. So that's something to look for, especially with an RSI cross. That could, possibly, do some good for us. I definitely, I was going to kind of talk about what you would look for knife catching, but I don't think this is a good time for the lesson. I don't want to confuse anybody, because I do think the downtrend is lower. And if we do get any upside, probably going to be capped by the weekly VWAP, which was our cap before the downtrend that was last week. So something to watch out for there. I probably will not be convinced of any bullishness until we break above the weekly VWAP, which has obviously been the kind of downtrend indicator on S&P and NASDAQ very recently. So let's over to crypto, or let's head over to crypto, which has obviously been a bit stronger. Tough to say strong when this is the general price action, but compared to equities, certainly a little bit prettier. I think, probably a little bit easier to glean some insights from, because it's not straight down. I have Monday's range here. So we have Monday's high up here. We have Monday's low down here. And we're obviously sitting dead center of the range, which isn't very fun, but you can obviously take some bets here or formulate some trades. So what I told the TTC community last night is I think an ideal trade for Bitcoin or ETH is sweep of the lows or sweep of the highs. I expected us to kind of more or less play the range this week due to not really dropping heavy. Again, equities are dropping, Bitcoin's holding. Doesn't mean that's going to last forever, but for now it is. So it's tough to really pull an indication here, but I would guess, just based on kind of the drift lower on a Tuesday, especially with equities, that will eventually drift lower and hopefully sweep that and give a nice play for the bulls. But I will say, if we break below 26K, which has been obviously surviving since Sunday, there's a pretty large gap here, in my opinion. I don't think that we're going to trade too heavily within here. So if we break below 26, I would definitely say mid 25s are in play. And then if you can break up, you have confluence here with the Monday high and the 1 hour estimated 200 moving average, which if you see here has acted as resistance ever since we broke down since July or September 21st. So if we can get above that, then that'll be a nice little bull signal. I would expect a lot of longs to come in and push us towards 26.8, 27. But indication right now is short with equities dropping and not too much spot interest either. This is certainly not what you want to see from spot CBD. It's pretty much all perps getting long here and or shorts closing, but no one's really buying Bitcoin at the 26.1, 26.2K level. So definitely a little worrisome for the bulls, but Monte, CJ, what are you guys thinking on Orange Coin today? Or do you guys just not have any thoughts? Because I'm sure you won't be alone in that sentiment.
Yeah, it's just, it's not at a point of interest for me. It's tough to buy when the market looks so heavy here. And I mean, if we're just to back up and kind of look at a broader market sentiment, the pre-halving year in general for Bitcoin is usually pretty neutral to bearish, especially in the second half. So, I think like the way that I've been thinking about it in terms of looking at being long Bitcoin or looking at the next cycle per se, I think if things don't pick up by February, then I will have to probably reconsider the next 4-year cycle into 2024 and then, have some type of different playbook. But as of now, I mean, I think Bitcoin's just going to remain uninteresting, maybe have one type of crash. If equities really have a continued downtrend, which it kind of looks likely that they will. I know everything always looks really bearish at the lows and really bullish at the highs, but I'm trying to just be patient and take a little bit of a longer term view. I think there will be better buying opportunities for crypto equities, things like Bitcoin, if the stock market keeps going down. But if things don't pick up by February, I would be a little bit concerned about the overall 4-year cycle thesis.
Before we bring Monte in, what is a level of interest to you? Like, are you looking for obviously a longer term purchase or a swing trade that's over several days or more than a week, or kind of what's your outlook for Bitcoin? I guess we can throw ETH in there too, considering they're kind of moving correlated. But what's an interesting trade to CJ? Is it just a big batch purchase, or is it a long on a sweep of 25K or something?
No, I don't really. Levels I'm not really looking at. It's more about the sentiment and the positioning. And I still think maybe you have one more test of 20K in Bitcoin. If I were to say, hypothetical level, that would be kind of interesting to me. But I think, just neutral bearish price action for Bitcoin for the rest of the year. Interesting to hear what you think as well, Monte.
Yeah, no, I agree. And I think that neutral to bearish price action prediction sets up some interesting opportunities. I'm kind of segueing into the alts here a little bit.
I'm sorry. The one thing that I would say in terms of crypto that I am doing, because that was your question that I didn't answer, Nick. I am shorting various altcoins. I think Link is about to probably top. BLZ is one we talked about in the community that's really outperformed. But if Bitcoin has kind of, neutral bearish price action, then Monte and I also talked about altcoin BTC shorts, which I think is probably where you're segueing into.
Yes, you're correct. Am I that predictable? Yeah, that's what I was about to talk about is, one thing that is, like you pointed out, in pre-halving years, we tend to see this bearish to neutral consolidation that lasts for a very long time. However, during that same period of time, no one's buying the alts. The alts bleed hard. And one thing that I think a lot of people don't take advantage of, and we mentioned this morning on Money in Motion, but I'm just kind of reiterating it here, is trading altcoins or shorting altcoins via their BTC pair. It really kind of smooths out the chart and it makes it a lot less likely that you get some sort of flash liquidation because Bitcoin will move along with that altcoin, making the pair more stable. If you're trading with the US dollar, that may not be the case. You can see some flash, like, some news that pops up, crypto spikes, and then you're out of your position. If you're trading with the Bitcoin pair, you don't have to worry about that. So I definitely think that's something that not enough people take advantage of. Some exchanges offer cross margin, where you can just, straight up short, or go long ETH BTC or go short Aave Bitcoin. Or you can synthetically create those positions if very easily. If you need help doing that, just drop by the Discord and I'd be more than happy to help you. But one trade that I am in is ETH BTC. And we talked about this last week a lot, Nick. And CJ, we talked about this a little bit this morning as well, but I still think this one continues to climb higher. We might find a little bit of resistance at the bottom of this wedge. But one thing that you'll note is okay, last week we broke down below the wedge. That was a little bit scary, but it's not atypical, right? No triangle is going to ever be perfect. You can see here we broke above the top of the descending triangle, and that was then met with some overwhelmingly negative price action in the ETH BTC pair. So when you get those overextensions, you tend to get a snapback to reality, and I think that's kind of where we're getting here. And I think we could plausibly see continuation up to the top of the wedge before we get some, before we get a reversal and basically, kind of tighten in to this range and then break down would be ultimately my prediction. But for the time being, I'm so long ETH BTC. I think that we could plausibly, grind all the way up to these levels here. As you can see from my watch list, ETH remaining somewhat steady relative to Bitcoin. And from a technical perspective as well, I think Bitcoin has a lot more to drop than ETH does. So at least for the next few days, I think that the ETH BTC trade is definitely one that is on the table. So I'm in that, full disclosure. And like I said earlier, if you need any help setting up that position synthetically, if your exchange doesn't offer cross margin, just drop by the Discord and tag me. I'd be more than happy to help. So
nice. I don't think that that's too bad of a trade. You definitely want to, watch out for that resistance up high, but it could definitely still creep up. So it was, it actually performed, pretty well over the weekend and into early this week too. So it was a little flat over the weekend, but had a nice pop on Sunday. So that was a nice thing to wake up to. Just pulling up the ETH chart here just to dig in, Monday range, I think is always important. Monday high, Monday low. As you can see, we swept the Monday high this morning and immediately sold off to mid-range. So, I mean, this is one of the most simple, trading playbooks in the book. High, low, mid-range. And what did we do? We swept the high, we dropped down to mid-range, we held mid-range, and we started to move back higher. So now the difficult part is if you didn't get long mid-range, trade right here is tough, especially with the weekly view op right there, but you have a range to play in. So if we jump up here, and also I think the interesting part was Bitcoin did not sweep that high this morning when ETH did. So another kind of feather in the cap for Monte there. So if we move up higher and we sweep that again, good short lower. And then if we obviously crater down to the lows and we sweep the lows, then you have a good trade set up there with obviously this mid-range acting as a very, simplistic midpoint. So I set those up in the TTC community. So if you want to talk about, Monday range trading, which, especially in these kind of neutral to bearish environments that we're talking about, very, very simplistic strategy to employ across many different assets as well. So with that being said, I wanted to kind of piggyback off what Monte mentioned on the BTC pairs. Is one trade that I took was Sol BTC. And this is going to be a bit more of a longer term trade. Most of my trades are usually just a single day. But this looks pretty disgusting in my opinion. And I would not be shocked if at minimum it swept these lows down here at kind of the, I think there's 3 zeros and then a 6-8. And then at best for my trade idea is it drops all the way down and sweeps the June lows. which are down here at kind of the 3 zeros and 5. So I'll be kind of looking for this to move lower, throughout October at least, and we'll continue to monitor that, update the TTC community, but mention that in there. And I'm currently on that trade, as Monte mentioned, synthetically, with being short Solana and being long Bitcoin. So of the same notional value, you have to mention that. So it has to be the same value. So that's kind of my outlook on a little bit of a random trade idea there. Do we have any other coins or stocks? If anybody's in the chat, feel free to mention. We'll probably wrap up here in the next couple of minutes. So if you do have a chart, obviously we did not, we weren't able to see everyone yesterday. So definitely want to make sure we're helping you out today. But if not, we'll just chat for another 60 seconds and go ahead and log off here. One final reminder I will mention for anybody who came in a little bit late: GDP revision on Thursday, and then PCE on Friday. Remember, PCE is the Fed's preferred inflation metric. So if you are trading equities, this will definitely impact you much more than crypto. PCE is expected to actually rise. I don't know why it's not here, but I think it's 3.5% the expected. Core PCE is expected to drop. So this is the same situation we had with CPI the other week as well. As CPI rose, but core dipped. So it'll be very interesting to see how markets react to that. But we obviously do want to see inflation decreasing overall. So I think all of Americans will be looking for these kinds of numbers. So that being said, Monte, CJ, anything else before we wrap up? Anything that's catching your eye, whether it be data, trade, news?
Yeah, I just wanted to share.
Got arrested yesterday, so that was fun.
Yeah, it's like reality TV. Anyways, I had to be true to the title of this episode, which was Hedge Fund Short Levels Rival That of March of 2020. And as you can see,
wow,
this is the U.S. fundamental long shorts. So fundamental hedge funds, macro hedge funds, in other words, they saw the largest net ratio or the largest leverage ratio decline since March of 2020. Anyways, they're getting really, really short on a relative basis. There was also a lot of selling by large and small speculators in last week's COT report, which didn't include Wednesday, Thursday, or Friday, which was also where a majority of the selling took place. So while COT data is still somewhat neutral, you have funds that are just really doubling down on this bearish bet, which could pay off for them. But also, I think you have to keep in mind that it would be interesting if we saw a little bit of a short squeeze going into next week. Either way, it's going to be very interesting to see how the cumulative COT positioning data comes in this Friday. Next thing, just to top off the rant on CLT, just wait for market confirmation. Wait for confirmation. Wait for a reversal candle, so at least there is defined risk. Otherwise, you're just buying a falling knife with no chance whatsoever, or very low statistically chance. Wait for there to be some defined risk, something like this, where, okay, above this level, I'm out of that short. But, we can live this thing, bleed over the coming months and probably do some type of full retrace. I think BLZ is an interesting short play. Link obviously has been one of the top performers. Saw a funny joke on Twitter today, said Link are soon to be submarines or something. Anyways, top of the range, I'd take a look at it. Either way, you have a point where you're exactly wrong. A lot of people buying TLT saying that it's deep value here. Be that as it may, wait for the price to wait. Don't be the first person to buy it. If you're the first person to buy it, you may have printed the low, but you're also kind of a sucker because 99.999% of the time, it's not going to be the low. All right, here endeth the lesson.
No, I like it. Those cartel coins are going to come back down to earth, whether we like it or not. You're not gonna sustain that kind of price action with negative 1% funding for the rest of your life. So I like those ideas, CJ. Alrighty, well, we're at the 30-minute mark, and we have some more trades and fun for the rest of our day to execute. So we're going to go ahead and get out of here. Just a quick reminder, that we are working with both BingX and Didex. BingX being a centralized exchange, Didex being a decentralized exchange. So depending on your trading strategy and risk tolerance, both of those will be great venues for you. There are links below in the YouTube chat where you can get signed up and get extra rewards using our link. So definitely go ahead and try those out if you're looking for a new trading venue. And of course, you can always find us in the Trade the Chain community 24/7, which you can get signed up for at www.tradethechain.com with a risk-free 14-day free trial. So get signed up, hop in the chat, ask us some questions, share some trade ideas, or ask us for hours, and we'd be more than happy to assist you. So with that being said, good luck. Happy trading. We'll see everybody on Thursday.